Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, good morning.
Hi, morning.
Hi, morning, folks. Well, it seems the US government is finally going to get back to work. So that's good news coming through. And I guess here, I mean, the bulls have been in a better mood right from yesterday. So let's see what those final numbers that tally from Bihar says and whether they can continue.
Well, that's right. That Bihar final tally is going to be important. Good to see that that shutdown has ended in the United States, so it didn't have any big impact on the equity markets. And all eyes on whether in the next few days Mr. Trump is going to make that phone call and go ahead and lower tariffs. I think those are the big triggers for the remainder of November. But result season almost ended. Breathing a sigh of relief.
Okay, well, it gets a little easier, but not for long, right? Because it's like a rolling earnings calendar. So third quarter is not very far away. I mean, 30 days to go for the end of the year. And then, you know, within the first 10 days of January, you start getting the third quarter numbers. That is October and December. Okay, let's take it from the top in terms of what you need to know. So US equities were mixed, not very much by way of change. S&P actually was unchanged, slightly higher. NASDAQ was down about 0.25%. The US House of Representatives voted to end the government shutdown. And that is the big story. So markets last night were looking forward to the House voting to end the government shutdown. And it has happened now, post, of course, US market close. That is positive. I mean, you know, of course, you can argue the fact that it's not really hurt. The shutdown's not hurt markets, not at all. So will it really help at the margin? It'll help with data. For example, the White House yesterday had said that, you know, the October jobs data will not be released, which, I mean, next week we'll get the September jobs data, the monthly jobs data in the US. But the October, we were supposed to get, the October number was supposed to come after that. So maybe now the first set of NFP perhaps will be in December, 5th of December. So this data gap, data vacuum, I think, of course, is hurting decision making, and people have started talking about it. Mag 7 stocks, the large IT stocks in the US, that yet last night underperformed the NASDAQ and the broader market as well. Maybe a little bit of rotation more than anything else. Just consider this. For the if you look at Nvidia, the poster boy of this big AI rally, and NASDAQ, last night was only the fourth time this year, that is 2025, that Nvidia was down 2% and the NASDAQ actually, the S&P 500 was higher. I mean, higher by anything, was in the green basically. So, and that's essentially how strong the push has been from Mag 7 and of course Nvidia in particular for markets to have done well. AMD was the other one, right? 7.5% higher, and there was that sort of analyst conference. The CEO of AMD expects 35% revenue CAGR over the next 3 to 5 years. And this is all, of course, on the back of AI spends into AI infrastructure. Cisco was up 4% after hours following its quarterly earnings report. 10-year yield, macro markets down 5 basis points to about 4%, 4.07. Oil prices down 3.8%, 4%, 62.68 on Brent. I saw this one headline, OPEC saying that 2026 supply is going to match demand. But that's a meaningful slide as far as oil is concerned. Now, just one bit on the Bihar exit polls. Access My India, which is a credible polling agency, they conduct exit polls and they've got it right in the past. Their poll came last evening, and their poll actually shows that it's a much closer contest in Bihar as compared to what some of the others showed. So just look at this. The Access My India poll projects NDA winning 121 to 141 seats. I think 120 basically is the halfway mark, as compared to 133 to 160, which was basically what other exit polls were projecting, which was kind of a clean sweep. I was making this point yesterday that exit polls in Bihar, at least the last two elections, they've been tricky, to say the least. 2020, 2015 as well. 2015 was a complete, dramatically opposite set of actual results. So, I think markets will take note. We've had a bit of a run-up yesterday, of course, included as well. So we'll have to, the final results in that sense still matter because they are tomorrow. And there's this new poll, a credible pollster who's thrown in their numbers. I'll just tie in the levels. Nifty target 26,100. We crossed 25,800 yesterday. Support is the 20-day moving average, which is moved up to about 25,711. And the 40-day exponential moving average, which is 25,444. Bank Nifty near-term target is 58,300. And support stands at 57,821, which is the 20-day moving average. I mean, if you're trading, if you're investing, it doesn't matter day to day. I mean, you get a bit of a knee jerk, etc. But if you're trading, and you got this, today's Thursday, tomorrow is the Bihar final results, and numbers will start coming in early. You want to go light on longs in that sense, right? I mean, purely if you're trading and not go in heavy, because you just want those numbers in the bag. And then, one can go ahead and take those positions what you want. So I think some of that will play out into today's session. And I think that's only sensible because it's in the very near term, doesn't matter beyond a few days, but in the near term it will matter because of the run-up that we've had in the very, very recent past. GIFT Nifty tells you that we start about 35 points lower. Nigel is now standing by with the F&O stats and positioning is looking like. Nigel, over to you.
Well, take that point, Prashant. The Bihar election result, in all probability, going by what the polls suggest, the market has factored in that the BJP will come in with a thumping majority. If that isn't the case, then in fact it'll be a bit of a surprise. But otherwise, that data point seems to be more or less digested. The other factor is going to be the India-US trade deal, and all eyes will be whether or not we could hear something from Mr. Trump in the next few days or so. What about in yesterday's trading session? The FIs, they continue to remain sellers, but they sold relatively less. However, the markets did well. And for the markets on the whole, both the Nifty ended higher, the Nifty Bank as well ended higher, and the open interest on both of them was lower. So it's telling you for the markets on the whole, there was a bit of a short covering bounce that did play out. The FIs, they took a shorting break yesterday because they didn't add any big short positioning, in fact. Just around 825 contracts, they continue to remain aggressively net short with close to 88% of their positions on the short side. And if you look at it in absolute terms as well, at around 1.6 lakh contracts on the short side, this market is still heavily short, and that's something you like. If in case we do get good news, then you have that, that trigger to push us higher. While the clients, they are net long, close to around 1 lakh contracts on the long side or thereabouts. Moving to what the FIs did in the stock futures, well, in yesterday's trading session, there was some covering that we saw on stock futures, and there was some long addition. So swing factor there of close to around 35,000 contracts. What's heartening to see is in the last few trading sessions, the FIs have gradually started writing more puts. And that was on display even yesterday. 70,000 contracts were written in yesterday's trade on the put side, which was much higher than the number of calls that were written. And that's why the PCR has gradually moved up. It's moved to close to around 1.23 as per the last check. Remember, it starts getting, getting to the upper end at around 1.6. So we're a distance away from that particular level. Two strikes come up for you on the screen. 25,900 call, good amount of open risk build up. And on the downside, the 25,800 put as well. Fair bit of open risk build up is what we saw on both these two strikes. Now, punching in the levels, going by the options data, well, on the upside, the 26,000, 26,050, that becomes like a bit of a resistance zone going by the options data. While the 20 DMA becomes your first reference point on the downside. Just going by the setup and going by the cues that you have, maybe in fact in the second half of November or maybe in this month itself, if you get a favorable verdict coming in from Bihar as well as a US trade deal, probably fresh all-time highs are on the cards. For that to happen, though, you'll have the Nifty Bank that needs to perform. And yesterday's high becomes a bit of a resistance. It's been making higher highs, to be fair, but that 58,500 becomes important, and the 20 DMA becomes a reference point on the downside. The sector that we'll be looking at could be the NBFCs, because going by the CPI print, it's very, very mellow, and in all probability, you're going to get another rate cut. If that happens, NBFC stocks will be in focus, and the result of the day could probably be Honasa, because those numbers look good, margins expanded as well, so we'll have to keep an eye out. The stock is a considerable distance away from the all-time highs that we saw earlier. So that's the result of the day. I'll track.
Okay, all right, so lots of earnings as we get ready to wind up the season. They will be in focus. By the way, Asian markets are quite a mixed shade, so it's not, all going in one direction. Some of the markets like Hong Kong, lower, Japan, also only very marginal gains actually in Japan now, 0.1%, 0.2%. By the way, SoftBank shares today fell another 5%. So that disappointment over them completely selling out, cashing out of NVIDIA, that's not entirely gone away. Again, about 5% lower. Along with all of these cues, let's remember the other good cue and the big cue is inflation, which obviously has cooled off substantially. Just a 0.25% increase in CPI inflation. in October, and we'll talk more about that as we go forward. For the time being, let's say hello to our first guest on the show. James Knightley, Chief International Economist at ING, is with us. James, good to be having you in. I mean, let's just start right there. I mean, as you're looking at, the India market and the macros here, how do they stack up? Because that inflation print has been looking benign. There are expectations that growth is going to be topping 7%. Of course, the equity market is still very sluggish. That's a different story. But how do things look here?
Yeah, they don't look too bad at all, really. Things are certainly moving in the right direction. And we're starting to see more houses talk more favourably about non-developed markets, equity markets. So, we're looking at sort of what's going on in Asia as being a more interesting story, really, given the valuations that we've got in the United States and also to a certain extent Europe as well. So the fact that got relatively subdued equity market performance may start to see more flows start to emerge into some of these markets as well, such as India.
James, what about the US itself? Now that this shutdown is ending and we'll finally, get out of that blind spot and we'll have more data come in, are you of the opinion that the US economy will show more deceleration, which means those hopes of more rate cuts from the Fed are very much intact?
Yeah, I think we've seen a bit of an equity market bounce over the last couple of days on hopes that we will get this reopening coming through. Partly that is because that will unlock all this money that hasn't been spent by the government. So it will mean that 3 million workers will start to receive more pay. It will mean the people on those SNAP food program benefits start to receive that money as well. And this is a substantial sum of money that will help to recharge their coffers and allow spending to pick up. So that's one positive. It removes a key headwind to growth. And of course, also remember the travel headwinds that we've had here in the United States, the problems with the shutdown that has led to air traffic control having some problems. So there was real concern about what that would mean for the Thanksgiving heavy shopping period as well. So this is a positive development from that perspective. But at the same time, we've got to remember that the data we have been getting, the Fed isn't completely blind. There's plenty and plenty of other alternative sources, various surveys and third-party data releases, and they have been pretty subdued. Business services have been okay, but outside of business services, things are looking much more subdued, especially consumer confidence and especially those jobs numbers we've been getting through. Those are looking increasingly weak, and that's given the Fed's mandate, so its dual mandate of price stability and maximising employment, we think still leaves the door open to that Fed rate cut in December.
Okay, all right. So another rate cut, and I think you had mentioned that, right? You were factoring in two, one in October and the other one in December. Let's talk about another asset, actually, that went on a back burner just, the last couple of weeks, which is gold. But yesterday, it's sparkled up yet again. What's the view out there? That's the one that had the big rally, went quiet for the last month or so, and it's perking up yet again. What are the targets out there?
Yeah, I don't personally cover the gold market, but certainly you can see it as we know that there's plenty of cash out there, and there are concerns about some of the valuations in some of the equity markets. Some people are looking for alternative destinations to park their money, and gold is still seen as a relatively attractive destination. So still seen as supportive fundamentals in this time of economic uncertainty, and especially when you've got plenty of American CEOs questioning some of the valuations that are out there on the equity market.
James, a bunch of more questions, but out of time. Thank you very much for joining us for that quick chat. Appreciate it here on CNBC-TV18. Well, I think we're going to stick with the macros, right? And inflation numbers in India, the October consumer inflation number has come in at record lows, 0.25%. But this is in line with the CNBC-TV18 poll. The drag came largely from food prices. Will this mean a rate cut from the Reserve Bank in the next policy meet on the 5th of December? Lata is here with more. Lata, over to you.
Well, we need to understand the depth of the inflation fall. It's not just 0.25% is definitely the lowest in the new CPI series, which started in 2013. But even historically, if you go back any number of decades, 0.25 would figure as among the lowest we have seen. And food inflation -5% versus our poll of -4.1%. This makes it the 5th consecutive month that food prices are lower year on year in the sense, deflation. We are not looking at a slower pace of growth. We're looking at aggregate prices being lower than last year. It's actually a high base. Remember, tomatoes at 100 rupees last October, even potatoes and onions, very expensive. So this is very much a base effect. But nevertheless, the RBI has to go by these numbers. And look at these. Cereals, pulses, milk, veggies, fruit. Very big weight in the food basket. all of them were down in October compared to even September. And this, despite it being a Diwali month. Normally, you would, prices start falling only in November. But this year, it's fallen even in a very high consumption month. And then now, let us look at it from the Reserve Bank's point of view. The Reserve Bank's mandate is 4% plus or minus 2% mandate. Now, CPI is under 4% since February of this, which means 11 months of this year, it's under 4%. And it's likely to remain that way even in the first 4 months of next year, according to economists. Then let's look at the 2% number. According to the Reserve Bank's mandate, you can't go below 2%, right? It is 2 to 6%, which is what 4% plus or minus 2% would mean. Now, it's below 2% since August, and that makes it about 4 months, 1 month where it is 2.01. But otherwise, from July, we are getting a lower than 2% inflation number, which will go on probably till December. So what is the Reserve Bank faced with? Inflation numbers clearly pointing to a rate cut. But between now and December 5th, you'll get the GDP data for second quarter, which is expected to be above 7%. And there are quite a few who believe it will be above 7.5%. That's because the deflator is very low. WPI is a negative. So what will Reserve Bank do? Will it say that I have space to cut, so I cut? Or will it say there is no need to cut because 7.5, and in fact, first half average would be 7.6 in that case, is a damn good number. Why should you waste the firepower now? We don't know. Chances are the majority in the street is veering towards a rate cut. So today, perhaps there will be a sentimental negative for bank stocks and a sentimental positive for all those, durables, real estate, NBFC, the users of bank money. Let's see what happens on December 5th.
All right, Lata, thanks very much for that. That's a pretty comprehensive look at the numbers and the historical context to it as well. Well, let me just quickly run you through the interactions which are lined up here over the next 2 hours or so. 8:35, the management of Senco Gold will be talking to us about the second quarter numbers. An interesting chat. Gold, of course, has pulled back a little bit from the highs. 9 o'clock, we have Rakesh Arora of GoldieStocksIndia.com to talk about the trend in metal space. Vedanta, of course, is one of the names we'll discuss. 9:20, Vikash Kumar Jain and Nikhil Gupta of CLSA on both the markets and macros. 9:40, we have Miki Doshi of UBS, who will be joining us from the sidelines of the UBS India Summit 2025. Following that, Ashok Leyland Management speaking with us at 9:50 on their performance in the second quarter. Towards the end of the program is the economy. Lata in conversation with S&P economist Paul Greenwald and CRISIL economist DK Joshi on the CPI numbers, export package and the growth stimulus from data center investments.
Well, time to slip in a quick break. A lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. We're looking at Tata Steel, Honasa, data patterns. They're on the back of positive news flow. On the flip side, Ircon, IRCTC, Lemon Tree Hotels, Kochi Shipyard, Cohance Life Sciences, and Aether Energy will be reacting to negative news flow. Take that break, come back. We get into further detail on all of these names.
Welcome back. So the cues across Asia are mixed, but there's more good news than bad. The US government at least is going to get back to business. We had a largely positive handover from Wall Street, though that issue around the AI trade that continues because the Nasdaq did falter last night. That's the picture across some of the Asian screens. Let's pull up the implied open and see what it's pointing at. Nice, leg up for the market yesterday. So it seems it's going to be a bit of a cautious start, and then we'll take it from there. Of course, we have lots of stocks to track. It's the fag end of earnings season, so let's straight away get to it with our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Nigel, let's start with Tata Steel, the big one. How did it look?
Well, Tata Steel's numbers actually were good. It was led by the India business as well as the Netherlands business. Both of them did quite well. So let's pull up the numbers. We'll see the absolute EBITDA, that they've reported beat our estimates by close to 400 to 500 crores, which is encouraging. That's on the consolidated basis. But as I always say, for Tata Steel, if you look at the geographic breakup, and that looked good. That's led the way by India, because India, we know that pricing was weak. But, the focus on cost as well as operating leverage to some extent in the first quarter of first quarter of this fiscal, they had a shutdown. So the volume bump up did happen in quarter two in comparison to quarter one. And that's where there was a growth of more than 15% on the volumes front itself. So India did well. Europe was more or less in line. But if you break up Europe, well, you'll see that the Netherlands business, well, that's in fact, doing much better. The Netherlands business has clocked closer on 6,000 rupees per ton in terms of an EBITDA, while the UK business continues to struggle. But net, the Europe business in line at around $8 to $10 per ton. They've been focusing on the cost efficiency programs, and at the half-year mark, they've done close to 5,500 crores of cost savings. And for the year, they've highlighted close to 11,500 crores. The net debt, though, moved up marginally, so we'll have to quiz the management with regard to that. But Tata Steel, the numbers look pretty good, led by India as well as Netherlands. I'll have a chat with the management later today, and we'll get you further direction in terms of how's the second half of the year looking. But green on Tata Steel. Moving to Sonal, she's here to tell us about IGL. Morning, Sonal.
Good morning, Nigel. Well, for IGL, it was a weak set. It was expected, but yes, it is still weaker, led by their gross margins. Revenues were just up 3%, but EBITDA was down 14%. Margins contracted 280 basis points, and profits were up 4.5% this time. Their gross margins were at 10.3 rupees per SCM, which was down 13% on a YOY and on a quarter-on-quarter basis. Even the volumes saw a single-digit growth this time, up 3.2% on a YOY and 2% on a sequential basis. Additionally, the company has announced that they have approved an alliance cum partnership with Masaha Construction, which is based out of Saudi Arabia. This is done in order for pre-qualification tender to obtain license for development of natural gas distribution networks in Saudi Arabia. So they are planning to expand outside the country. We'll get more details on this one on the conference call today, but going with red on IGL today.
Okay, all right. Thanks very much, Sonal, for that. Well, Vinny is here with IRCON and IRCTC. Vinny, good morning.
Hi, good morning. So firstly, we'll start with IRCTC. The numbers, revenue growth, high single-digit growth, 7.7% there. Profits of the company seeing an 11% growth. Margins have remained largely flattish, 35.2% versus 35%. Now, but what the main concern comes in is the ticketing revenue. That's seen a growth of just 4% on a year-on-year basis. And this is, despite being that festive season, which has come in early this time in Q2 of FY26, despite that, the growth has just been in single digits. September, normally, when you look at it as a month, is seasonally weak. But apart from that, because of the festive season, we were expecting better growth. That has not come in. And revenue was only driven mainly by tourism segment. So that is something we'll watch out for. But red is what we're expecting, given that the revenues have just seen a very muted growth this time, not much. Other than that, IRCON International, red expected here as well. Weak set of numbers from the company. Revenues down by around 90%. Profits of the company seen a decline as well. And operationally also not that great set of numbers. Margins are down by around 100 basis points on a year-on-year basis. Revenue that has seen a decline in terms of growth for the sixth consecutive quarter. So that is important to watch out for. A weak set of numbers there. Order book standing somewhere around at 23,000 crores.
Okay. All right. Got that, Vinny. Thanks very much. Let's move on and look at Lemon Tree. Manglam, morning. How are the numbers?
Well, Lemon Tree is seasonally weak. We've seen that in all the hospitality companies. The second quarter impacted by geopolitical headwinds. There was extended rains, etc. All eyes are on the second half of this year. So 7.7% revenue growth. The EBITDA is absolutely flat. And the net profit actually has seen a bump up only because of lower finance costs. But be that as it may, the internals, when it comes to occupancy, average room rate, and the rooms that they've added going forward, along with increased management fees, looking a lot better, with the second half looking good for the hospitality sector as well. So opens in the red, but thereafter I expect recovery.
That's Lemon Tree. Let's talk about Honasa. Is it going to paint a green picture like Asian Paints did yesterday?
Right. If you look at Honasa, it's the result of the season for me. Why do I say that? Because yesterday we had an incumbent comeback that was Asian Paints, but thereafter today we have a disruptor coming back. A 16.5% revenue growth is what the company has reported. If you look at the underlying volume growth at 16.7% as well, a strong positive. They've, come out of their distribution-related issues, and the EBITDA has turned from a loss of 30 crores into a profit of 48 crores. And the net profit also on the bottom line from a loss of 18 crores has turned into a profit of 39 crores. All guns blazing. Their main brand, Mamaearth, is back in green, doing extremely well, double-digit growth across important channels. And at the same time, you've got Dermaco, which is the sunscreen business, which has an annual run rate of 750 crores, making it the #1 sunscreen brand in the country. So all these factors doing well for them. They are expanding, offline, along with making a small acquisition that they've done, a 10 crore acquisition for 25% stake in a premium oral care business. So the stock, which is fairly off its 52-week high and still below its issue price at 324, I expect a big move on Honasa today.
16% volume growth, right? You said for Honasa? Yeah, I think that's what the numbers are, saying, and it's absolutely phenomenal. Thank you for that, Manglam. We'll watch out for that. Quickly heading to Ekta now for Cohance. Ekta, tell us more.
Well, disappointing set of numbers. The revenue was down around 8% margins came in at around 22%, and a profit came in at around 66.4 crores. Now, the revenue decline, the company has said, is due to deferred shipments at the CDMO and FDF sites, some molecule destocking, and timing of certain projects, especially at the NJ Bio, which has possibly been delayed. So adjusted for destocking, the company has reported a growth of 14% as per the company. However, longer term, company remains on track to achieve its $1 billion target by 2030 with mid-30s EBITDA margin. So they are on track for the longer guidance. But for today, the revenue decline of around 8% should probably weigh on the counter.
Okay, all right. Ekta, thanks very much. That's Cohance for you. Keep an eye as we start. Upasna is now with us with Cochin Shipyard and data patterns. Upasna, morning.
Good morning. First up, let me start with Cochin Shipyard. Overall, it's been a weak quarter for the company. It's a miss on all fronts. Revenue down about 13% on a one-year basis versus the street estimates of a 10% growth. EBITDA also declined 71% and margins dipped sharply, nearly about 1,200 basis points to 6% versus 18%. While the street was going with an estimate of nearly about 12% on this one. Now, coming to the net profit, they have nearly halved 200 crores. Versus the estimates of stable profits. Now, profitability for the company has been impacted due to sharp rise in the subcontracting expenses and even the provisions. Now, if we look at the provisions, they have seen an uptick of nearly about 4 times to 21 crores. Now, coming to data patterns, overall, if we see, the revenue has seen a jump of 3.4 times to 307 crores versus the estimate of 37% growth. So it's a big up move in terms of the revenue. Coming to the EBITDA, it has doubled to 68 crores. Net profit has jumped to 62% on a one-year basis, and margins have seen a decline of more than 1,500 basis points to 22%. Now, margins are mainly impacted because of the significantly high material cost that the company has seen. Now, coming to the material cost, which is why the margins were impacted, they've seen a jump of nearly about 61% on a one-year basis. Now, if you look at the order book of the company, it stands at 737 crores. So overall, if I see Cochin Shipyard, weak set of numbers, and data patterns going with a mild green on this one.
Okay, all right. Thanks a lot for that, Upasna. Going to Vivek. Then Vivek, Aether Energy, stock in focus, large trade is expected?
Well, that's right. A large block deal is expected in Aether Energy. So National Investment and Infrastructure Fund, which held close to 4.7% stake at the end of Q2, is looking to pair some amount of that, looking to pair almost half of that. So as per the term sheet that we managed to access last evening, they're looking to sell close to 2.34% of the total equity. That amounts to an exit of a little over 550 crore as far as NIIF is concerned. Now we understand that the floor price for this particular deal is at a discount and will happen at close to 620 rupees per equity share. Expect some mild pressure on the back of this equity supply that is expected in Aether Energy today.
Okay, all right, Vivek, we will keep Aether on our radar as well. Thank you very much for that. Now, that's the equity stock list for the day. Let's find out what's happening in commodities. Manisha is joining in with the latest. Good morning, Manisha.
Morning, and thank you for that, Sudhvi. I'll start with the crude oil prices and a 4% of a decline onto that one on an overnight basis. We're trading at a 3-week lows with that. This is on the back of the OPEC and the IEA report, which suggests that there's going to be more supply than demand in 2026. In addition to that, you have the U.S. crude inventories, which also surged for a second straight week, weighing onto the prices there. But that's exactly where the declines end, because when you look at the precious metal and the base metal prices, well, we have seen strength return to this one. Gold is back above $4,200 an ounce. We've seen 2% of gain on that. Silver prices gained up by almost 4%, $53 an ounce back on that. And we're also looking at strength continuing for copper and aluminum, 0.5% to 1.5% of gains across base metal prices also.
Okay, all right. Thanks a lot for that, Manisha. Time to slip into a short break. On the other side, Dharmesh Kant, Head of Research of Chola Securities, will be joining in to help us out with some fundamental stock talk. Welcome back. You're tuned in to Bazaar Morning Call. Well, all eyes will be on the BR election result, as most exit polls give the NDA the edge. Access My India exit poll predicts the NDA win a little bit narrower, though. Sudarshan joins us with a quick analysis on that. Sud?
So what a busy day, 2 days it has been for all the pollsters. Over the last 2 days, we have seen many pollsters coming out with their polls, exit polls, and some of the names we have heard for the very first time. And yesterday, two of the important agencies, Access My India and today's Chanakya, have come out with the polls after 24 hours that voting had ended. Now, while on the one side, most of the exit polls predict a huge margin or huge lead for NDA, and they are giving seats in the range upside. If you take a look, today's Chanakya is giving as much as 160, and range for Matrix 147 to 167, JVC 135 to 150, Dainik Bhaskar 145 to 160, and these are numbers for NDA. On the other side, for Mahagathbandhan or say RJD-led alliance, and for that, today's Chanakya is giving as low as 77, and the range is 70 from 70 to on the lower side. On the higher side, it goes to 103. But on the other side, Access My India, which is tracked very closely, they have given for NDA in the range of 121 to 141, and for Mahagathbandhan 98 to 118. So the mid-range that if you take a look, for NDA it comes around 130, and for Mahagathbandhan it comes around 110 to 115. So narrow margin. Two things. One thing that has worked for Mahagathbandhan, that is the promise for government jobs to youths. So most of the youths have largely voted for RJD. For Nitish Kumar, what has worked is the women voter. It's for the first time we are seeing that women voters have voted more than, total percentage was more than 70%. It's the highest ever that we have seen. But real picture comes out tomorrow. We'll have to see if Nitish Kumar takes oath as Chief Minister for the record 10th time. That we'll have to wait for 24 hours.
Absolutely. We just put that graphic back again. Very nice. Tells you why we should pay attention to this as we go into tomorrow's session. And this is the divergence, right? 121 to 141. So if you're there, halfway mark is 120, right?
122.
122 to win.
243 seats, so halfway mark is 122.
Yeah, 122. 2 to win, yes.
Yeah.
So this is, the Access My India is bang in the middle, right? I mean, right there. So it's kind of a little bit, it's much closer. And most others. And today's Chanakya, of course, is by far the big one in terms of giving the maximum number of seats to the NDA. But look at the others as well. They're all projecting a clean sweep, which Access My India is not. And you should pay attention to the outlier. If for no reason, just to kind of sort of be safe, if you're trading, as I said, right at the word go, because results will start coming in. By the time we're here this time tomorrow, results will be hopefully coming in thick and fast, and we'll start to get a picture by, I think, 10:30, 11 or so. So thanks very much for that. Bihar, of course, I mean, the electorate, one of the most politically savvy and aware electorates out there. Dharmesh Kant is with us. He's he's head of research at Chola Securities. Dharmesh, great to have you with us here. Thanks very much for joining us. Let's just start with some of the big sort of moves from the last couple of days. We'll play out this Biocon soundbite, but there is a story in one of the newspapers as well, which was confirmed to us by the management yesterday. Biocon Biologics getting merged into Biocon. It's a large deal. Biocon, the stock was up about 4.5% by close yesterday. I don't know if you've looked at this one closely, but your thoughts?
Yeah, good morning, Prashant. Thanks for having me for the show. No, I haven't looked at very closely on this merger deal and how the things are going to play out. But at the end of the day, I mean, this may work well for Biocon Biologics because it's a single concentration of management and focus area. So that is it. But details of how, I mean, the financials are going to play out and how it is going to help Biocon Biologics by getting the balance sheet benefit of Biocon, that has to be seen in greater detail.
Okay, all right. There were a lot of good results that came out, Dharmesh. Anything that caught your eye? Case in point being a Honasa. I recall when it listed, the stock went dancing away close to 500 rupees. Then it corrected close to around 200 rupees. But these numbers look good. 16% volume growth. The margins have improved. And ad spends as a percentage of the mix, that's come down from close to 40%. It's come to the low 30%. Street will like that. Any view on this name?
Yeah, good morning, Nigel. I mean, numbers particularly has been really encouraging as far as 16% volume growth is concerned. And but if you look at on a like-to-like basis, for example, if you compare it with Nykaa, then quarter on quarter the numbers are not that great. Nykaa came out with a better set of Q&Q growth numbers on all parameters. Here, Onasa, last year same quarter was a very bad quarter for them. In light of that, it looks particularly good. But again, the differentiation is being on the valuation front. So Nykaa trades almost 500, 600 times of its earnings, whereas it's around 110, 115 times its earnings going forward. So there, I think the benefit is there. I think it's more of a trade to play out, maybe 10, 15% kind of an upside in say 2, 3 months. And that is it. We are not looking at both of the counters, be it Nykaa or Honasa, as a thematic wealth creator kind of a play.
Okay, that's on Honasa. Dharmesh, Asian Paints, what a story yesterday, right? And what a blowout blockbuster performance. Now, what do you think? I mean, I saw a lot of the brokerage notes this morning. A lot of people are calling for a return to 3,000 plus sort of levels on Asian Paints. What's your sense?
Good morning, sir. Even I am on the same camp. I mean, the stock price can rally to 3,300, 3,100 kind of a level. So, but I mean, this again is a trading rally. Look at the numbers. I mean, the volume growth was 11% and the value growth was 6.5%. Same was the case with Bazaar Paints, where volume growth was higher and value growth was less. So this does signify that there's a heated competition in the space. And the players who are there, the new players, be it JSW Group or Grasim, and the others in the foray. So 2, 3 more players have entered the space. So they are going to create a competition far higher. And it will be more of a volume-led growth. And now the second part is what is the valuation multiple? They are trading it with the kind of profitability growth these players have to offer. So at best on a value front or the PAT front, you may get a 10-12% kind of a profit growth. And in light of that, if you are valuing a company of say 40x, 50x P multiple, it's not sustainable for a long-term basis. So trading plays and one bad quarter or slight slippage may have the stock price correcting 10-12%. So that is how we are looking at this segment. Take it as a trading play.
Okay, so a trading play perhaps. That's Asian Paints. Dharmesh, stay on. We'll take a quick break. I need to discuss more stocks with you. We'll do that in a bit. And when we come back, we'll also be connecting with the management of Senco Gold and Diamond to discuss the second quarter performance.
Well, the largest running U.S. government shutdown, I think, is being ended now. The Senate passed it earlier, the House voted on it, and now it's the bill to end the government shutdown is at the president's desk. I don't know if you have audio, maybe just cut across to it for like 10 seconds, and there would be this ceremonial signing bit.
At levels never seen before. Today, we're sending a clear message that we will never give in to extortion, because that's what it was. They tried to extort. The Democrats tried to extort our country. In just a moment, I'll sign a bill exactly like we asked Democrats to send us all along, many days ago. This cost the country $1.5 trillion, this little excursion that they took us on. Republicans never wanted a shutdown and voted 15 times for a clean continuation of funding. There's never been a time when one or the other party ever didn't sign a continuation. It's just a continuation, not a big deal. It's a continuation, and we'll talk later. Yet the extremists in the other party insisted on creating the longest government shutdown in American history, and they did it purely for political reasons. I want to thank Speaker Mike Johnson, Senate Majority Leader John Thune, as well as House Majority Leader Steve Scalise, Majority Whip Tom Emmer.
Well, some sharp political barbs as expected from Donald Trump. But, I mean, the U.S. government shutdown, longest running government shutdown in the history, and we've had many in the last 20, 25 years now, is history. So that is what is coming through at this point. Yeah.
And he also mentioned that after this is a bill to just end the shutdown. And then the final sort of bill on which he'll sign, he said it's going to be exactly in the same shape and form as they intended. It doesn't give it 1 inch, right, the man? Doesn't give one bit. Hard negotiator, he really is. And that's why we know that I think India is still doing that negotiation, the only one major global country which hasn't yet entirely given in 100% to perhaps what the American administration wants. Anyway, those are visuals. For now, the US government at least gets back to regular business. So that's good news. Wonder when the jobs report will come out, because last 2 months we've not had a jobs report. And I think that'll be a keenly awaited document. Anyhow, coming back to some conversations here at home and its earnings that we're tracking. So as promised, let's straight away look at Senco Gold now. The company reported a muted set of numbers for the second quarter, and growth numbers were a lot lower compared to the rest of the industry as well. To talk about this, we have Suvankar Sen, MD and CEO at Senco Gold. Suvankar, thank you very much for joining in. So your top line growth is, in low single digits. I mean, just 2.5% top line growth. And I understand in the call you've said there was flooding and there was Shraddh, but all the other jewelers also had similar issues to face with. Yet Titan grew 25%, Kalyan grew 30%. So we're just trying to understand what were the company-specific issues that pulled down this quarter.
So, if you look at the numbers a little more deeper, the standalone numbers, we had a 6.5% growth. In the console, we had about a 2% growth. But a lot of our customers actually postponed their buying, waiting for the festive season. So if you look at the YTD numbers as we ended October, we had a best ever October month with 1,700 crore sales compared to 1,100 crore sales in the previous year's October, which if we look at it now, we are at about a 25% growth year on year. So it's just that the particular Q2 with the gold prices being in an upward trend, consumers were in a wait and watch and all the weather and all the other things that were there. But ultimately, customers had to, give their advances and do their billing and booking in the month of October. So nothing much to worry about. As we look at it, our overall year's growth of 20% or so is very much in line. And as on date, we are at above 20% growth year on year. So it's just that the particular quarter, if you look at the numbers, especially with the last year's quarter, last year's same quarter, we had the duty cut, which had a good impact on the sales.
Suvankar, sorry, just to come in, you said 1,700 in October versus 1,100. That is like some 55% growth. And
Yes.
and then you said you're tracking 25% growth. So that is October till date. A Q3 till date growth is 25%, is it?
Correct. Q3
So November has come off sharply. I mean, October, of course, there was a fair bit of pent-up, etc.
Yes, exactly. So that is the thing. So therefore, we should not get little worried, at all about the Q2 growth number.
But if you've grown 25% so far in the year, then wouldn't you expect to end the year also at 25% growth? Because I think you're still guiding for 18 to 20%.
So as we go closer to the end of the year, our guidance will become much more accurate. But seeing today, we can say that there is a higher probability of getting a 20% growth rather than 18% growth. So we should continue to remain positive with the wedding season very much in, and we can see the interest amongst the consumers there. So a 20% growth looks much more, sure, considering what we see today.
So, Vankar, on the wedding season, I mean, festive is over now, it's all about the wedding season. The high price of gold, is that at all being a deterrent? I mean, if you look at wedding season this year, your expectations versus last year, will there be a blip just because of the way gold prices have moved?
See, in terms of value, I see that consumers have their budgets. They will continue to buy what is within their budget. If we look at the average ticket size of the consumers compared to last year, it has grown by 20-25%. So consumers are pushing and trying their level best, either using their income or old gold that is there. That has also become an important tool to ensure that consumers can continue to buy. However, in terms of volumes, we are seeing that there has been a dip in volumes. Consumers are being able to not buy that much quantity of gold. YTD, we are looking at a volume degrowth of 12 to 15%. So yes, people are looking at jewelry which is lighter weight within their budgets. But overall, 20% is what we see the ticket sizes have gone up.
Okay, and a quick word on the margin as well. At the end of the second quarter, I mean, Q2, you're at about 7% margin. Just tell us what's the outlook on margins for the second half and the full year, and what role does the gold price play in that margin, and how much of your inventory is hedged, unhedged? Because I mean, just the markup valuation on this gold, that would also give you gains. So just explain the margin trajectory to us for the rest of the year.
So at the sales, if you look at the hedging in terms of sales, we are almost 90 to 100% hedged. So, the stable margin that we always say that is there in the business is in the range of 6.9 to 7.4%. So that's a kind of a stable margin. And if you look at the overall year's margin numbers, I think we should be doing anywhere between 7.1 to 7.4%. So that should be the EBITDA margin we should be looking at as we will be, ending the year. And the impact of gold prices because of 90 to 100% hedge on the sell side. And if you look at the inventory level hedge, then it is on the average of about 65 to 70%. So that's how it is. We are very confident the sales of diamond jewelry. Q2 has seen a little bit of a dip, but with Q3 and Q4, the wedding season, the Valentine's Day, and all the other seasons that are there, we will see a growth in diamond jewelry, which will compensate for any kind of pressure in terms of gold price discounting or anything else. So we are confident that a 7.2 to 7.4% EBITDA margin should be there by the end of the year.
Okay. All right, Savankar, we will leave it on that note for now. Thank you very much for joining in and explaining some of these trends that were at play in Q2. That's Senco Gold. Very quickly, let's move on a couple of other stocks to address as well, including Biocon. Reports have been suggesting that the company could be merging Biocon Biologics with the parent to unlock value. Ekta is here to explain this to us. Ekta, just tell us, how this could play out.
Well, yes, Biocon continues to be in focus in today's trading session. Yesterday, it was primarily in focus on account of its numbers, but they did say that they are exploring a possible merger of Biocon Biologics as well as Biocon. This is something that they had indicated to us in their earnings interview and could possibly look at the nuances of this merger in CY25 itself. So we could possibly hear something tangible in this year itself on this possible merger. Now, in terms of the merger size, reports indicate it's estimated at around $4.5 billion. The company is in advanced talks with minority investors for a possible share swap, and they have been looking at options such as a merger, share swap, stake sale, etc. Remember, this is in order to reduce the debt burden on Biocon Biologics books, which stands at around $1.2 billion. To give you a background, Biocon Biologics had acquired Viatris, their biosimilar business, in 2022 for $3.3 billion, which resulted in this heavy debt burden that they have been servicing. Biocon holds majority stake in Biocon Biologics, whereas Serum holds around 5.97% stake. HSBC has also written on Biocon. They have a buy with a target price of $455. According to them, Biocon has settled the structured debt with Goldman Sachs as well as Kotak utilizing QIP funds. They will be settling with Edelweiss by Jan 2026, which would result in relief on interest costs and help sharpen focus in the biologic segment. So overall, the merger between the two entities would be something that the street would be watching closely.
No, absolutely. Ekta, thank you very much for that. So that's Biocon in focus, about 4.5% yesterday, and I think we'll keep an eye out on it today as well. Dharmesh is still with us. Dharmesh, the new listing yesterday, Grow, any thoughts? Tata Motors commercial vehicle business got listed separately. That's another one which, if you want to weigh in, do come in. And, BSE is back above 2,700. What would you do with that?
Yeah, all the capital market pays have been doing exceedingly well. The numbers of BSE was excellent set of numbers. 61% kind of growth on the backdrop of it. NSE, when they reported the numbers, there was a degrowth out there. So clearly, the BSE has been gaining more strength into the market volume share. So our take has been very clear and simple. I mean, what we have been recommending is all the exchanges place with the infra into play. I mean, BSC, CDSL, NSDL, and the AMC place should be, treated as a basket along with AMCs. What we have been avoiding particularly has been the direct brokering place like Motilal Oswal and all. Grow the price, ticketing price was such 9,500. I mean, that do attract retail interest quite a lot, and we were expecting 15 to 20% kind of a bump up on the listing, which has happened. Though we had a neutral rating on the IPO note for the growth. I think from here on, it will be again, it will consolidate and time-wise, I mean, consolidation will happen. It's trading at a premium, but with this clarity coming or the delay in the option, weekly option expiry going away for some time, will help, maintain and sustain its valuation multiple. So if you have already applied for the IPO and invested, the recommendation is to stay invested, but we are more focused on exchanges, infra, and the AMC plays in the capital market space by creating a basket.
Dharmesh, we'll leave it there. Thanks very much. Useful conversation as always, and good speaking with you. Ather has seen a large block. So 53 lakh shares of that's worth about 330 odd crores changed hands at 622 rupees per share in the block deal window. Look at the volumes on that one at this stage. Take a break. We are back. Technical trading ideas on the other side. We also, of course, have Rakesh Arora of GoIndiaStock.com joining us to talk about Tata Steel and, of course, other metals in focus as well. Okay, welcome back. I think the pre-open session has kicked off, and we'll look at rates in just a bit from now. Sudarshan is with us, and so is Mitesh joining us now. Gentlemen, good morning. Great to have both of you here with what you make of things. Coming to you a little later than usual. Sudarshan, you go first. How would you trade things?
Good morning. Well, the world over, markets had a decent rally, including India, and they are now consolidating. So we are likely to follow that pattern of a consolidation. For India, we have a very specific reason also, because tomorrow we have those Bihar results, the actual results, and markets get nervous before actual results come in for any election. So my view for today is leave aside the Nifty. There's no sense in buying into choppy, small movements and then getting, losses all over the place. Wait patiently for tomorrow morning. Once the market develops a view in the afternoon or mid-morning, take a trade in that direction, preferably on the long side. So the Nifty is an avoid. Focus on individual stocks.
Okay, all right. Focus on individual stocks. Coming back to you for your stocks. And Mitesh, coming to you, what's your view?
Good morning. So I think, yesterday we talked about 25,800 and then we've closed about that. So now 25,800, 760 becomes a support zone for me. I think I would now want to buy if we get a pullback towards that level. Else this market can possibly hit 26,100. So I think it looks like slightly upward bias to me. But a fresh entry, if somebody wants to take, I think should be on a pullback. But yeah, on the stock side, we're trading with very clearly more of long bias, though I think today I've got some sell calls as well. But overall, I think it's more of long bias.
Okay, all right. And got that long bias from Mitesh. Sudarshan, you said you'll be more stock specific. So please help us out with your stocks.
CDSL, buy with a stop under 1620. That big boy Reliance, buy with a stop under 1480. Supreme Industries is a buying opportunity with a stop under 3850. And Persistent Systems is a buy with a stop under 6000, which means I have an all buy list. I only said that we should be, because the markets are likely to consolidate, wait patiently. Even I have a bullish bias, but I wouldn't buy today.
Got it. Bullish bias, but not buying today, but giving us good amount of trading ideas. Thanks for that, Sudarshan. Mitesh, coming across to you, if you could fill us in with your picks.
I have a buy on Lupin. It's a conditional buy. It's about to break above a trend line. So once it crosses 2045, which is about 10-12 points higher than where it closed, buy with a stop at 2025. I'll look for a target of 2090. Also a buy on Adani Ports with a stop at 1484 for targets in the range of 1550 to about 1650 to 1560 to about billion. A couple of sell calls. Bajaj Finance is a sell with a stop at 1032 for targets of 980. And ABB is a sell with a stop at 4982 for targets of 4820.
Got it. Okay, all right. Thanks a lot, gentlemen, for that. Let's focus on the metals pack then. Vedanta is a stock that's in focus. Remember, yesterday there was that hearing. Ashmit Kumar, my colleague, joins us to help us out with what's the latest on that front. Ashmit?
The NCLT concluded hearing arguments and reserved its judgment on Vedanta's plea seeking nod for the demerger. The brief hearing saw the government renew its opposition to demerger of Vedanta. The government claimed that Vedanta is liable to pay the government 16,700 crore rupees. The government argued that pre-demerger, Vedanta would have assets of over 2 lakh crore rupees, thereby giving ample protection to government's claims. The government submitted that post the demerger, the proposed oil and gas entity would have assets of only a little over 29,000 crores. Now, Vedanta countered the government's position, claiming that 29,000 crore rupee assets, that's an asset base that's 1.8x the government's total claims of 16,700 crores. The government further objected that Vedanta had not disclosed claims that are currently being fought over in arbitration. As per the government, Vedanta could be liable to pay anywhere between $222 million to over $1 billion. Vedanta rebutted this by saying that the Indian law, they are not required to recognize or disclose a claim till it is confirmed by a court of law. The government had also claimed earlier that it was against Vedanta mortgaging oil and gas assets for raising funds. Vedanta clarified that it has submitted an NOC by as many as 8 banks confirming that the oil and gas assets are free from any mortgage or lien. The NCLT has reserved its judgment. No clarity has been given on when the judgment can be expected.
Thanks for putting that together, Ashmit. We'll wait for the verdict to come out, but for the time being, hearing is done. To discuss the Vedanta case, Tata Steel's numbers, and the metals pack, we have Rakesh Arora, founder of GoIndiaStocks.com, who joins us. Hi, Rakesh. Good morning. Good to see you in after a while. What's your view on Vedanta? The stock has done very, very well. There is hope that, in fact, now the hearing is over. And the management had told us here on CNBC-TV18 as well, they are ready to give that corporate guarantee, which could help them out in seeing this demerger go through. Is there still value to be created if this demerger goes through from here on?
So, Nigel, Vedanta is having a good time with aluminum prices, silver prices all, hitting new highs. So at least there's earning support coming in for the stock. Demerger per se doesn't really, create too much of value, according to me. Because when you look at research reports of analysts, the only holding company discount they were giving were for Hindustan Zinc. So most of the analysts do a 20% holding company discount for Hindustan Zinc. That is not getting demerged from Vedanta Limited. So there's hardly any holding company discount which is going away. But there could be some value creation for some segments which they might dispose of, which were not earning enough. So that is the only value creation which can happen in Vedanta from demerger. But looking at the past history, there could be other issues of intercorporate transfers and all those. So I don't think demerger itself would be a great value creator.
Okay, all right. You briefly spoke about aluminium. So let's focus on the 3 players that we have. Hindalco, that Novelis's capex, has put the stock on the back burner. Stock has seen a good correction. Because now, that capex is much higher. Q3 will be a washout for Novelis because of the fire as well. What is your view on Hindalco? And between Hindalco, Nalco, which has suddenly come back into play, but we have seen it in the past, Rakesh. Sometimes it gives very, very good numbers. When the cycle turns, it'll be back down to less than half. And Vedanta, which is again a tricky one. So between the 3, what's the pecking order?
So, if one has to play the commodity, then a pure play is much better as compared to the rest. So Nalco has, is one of the purest play. So if you are very bullish on aluminum, I think that would be the way to go. If you're trying to hedge it, probably Vedanta, because it has a few other commodities, so it kind of balances things out and there's euphoria about the demerger. Hindalco clearly has been a little bit of underperformer and there's hardly any catalyst that we can think of which can move it out of that range soon enough. So that's the pecking order.
Okay, all right. And let's shift focus then to the Ferris pack. Tata Steel came out with its set of numbers. The India business actually did quite well. Netherlands continues to do well, while the UK on expected lines is still a loss. But I think the street is hoping that maybe by the end of this year, that as well turns profitable. Your view on Tata Steel's numbers first?
So Tata Steel numbers were a little bit of positive surprise because their realizations and EBITDA per ton in India didn't dip as much as some of their peers like JSW Steel. So, and when I look at the consensus estimates, they are not really too way away from what Tata Steel has reported in the first half. Meaning, like if you look at JSW, they did 15 rupees EPS in the first half, and estimates are at 44 rupees. So there is a little bit of an earnings cut, which would still come in JSW, but Tata Steel seems a little bit okay. But having said that, steel prices in India haven't shown any signs of picking up at the moment. And even Chinese steel prices have dropped by around $18-20 in last month or so. So there's a lot of hope. Steel stocks have been a great performer in the last 12 months. I think now we are reaching a territory where more neutral. There will be support coming in if steel prices recover in the busy season. But valuations are already too high and there's nothing much to play out there.
So you won't be bullish on any of them right now? JSPL, JSW Steel, Tata Steel, SAIL?
They might be a little bit supported at these levels, but mostly in a trading range. I don't think there's a bull run happening in those stocks.
Okay, all right. And finally, my colleague Yash here broken the story that there could be some value unlocking on Bhushan Power and Steel. The suggestion is that probably there could be some part of the promoter stake, which is around 17%, gets sold, and maybe JFE comes into Bhushan Power and Steel. And the listed entity as well, JSW Steel, that has roughly 83%, they as well pair some stake. What would you value Bhushan Power and Steel as an asset at? And do you think this will be good amount of value creation?
So, I mean, it's too small for JSW now because JSW is such a big company and this is a small asset and a small stake sale. It doesn't really move things in terms of valuation. Maybe JSW wants to establish, that they haven't bought this at ridiculously cheap price. So I think that's the only motive that I can think of why they would want to give away a minority stake over here to, some external party. Otherwise, there's hardly any value.
Value it at? What would you value the asset? They bought it for under 20,000 crores. What would you value the asset at now?
So, Prashant, very difficult to say because JFE is their interested party for last more than a decade now. So we don't know what it will be a mutual deal. It's not driven by fundamentals.
Okay, all right. We'll have to keep an eye on that, Rakesh. We have been talking about JFE probably increasing stake from your Macquarie days, I think so, from those analyst calls at ITC and those Saturday evening meetings as well. So let's see what they do with this asset. They managed to turn it around. Now it does close around 3,000 crores of EBITDA per annum. So interesting deal, but how does it play out is something we'll track. Appreciate you joining in, Rakesh. Wishing you a good day ahead and catch up soon. Let's go across to Mitesh. He's here to give us his 9-10 call. Mitesh?
I'll go with the buy call, and that's just a minute. Sorry, yeah, I'll go with the buy call, and we'll choose a buy on Adani Ports for targets of 1550 to about 1560.
Okay, so that is Adani Ports. By the way, the pre-open session has settled down. Nifty 30 points higher. Honasa is the biggest gainer, 6% up. And Cochin Shipyard, really disappointing quarter. Cochin Shipyard is down about 7%, 8% in the pre-open right now. So Darshan, your thoughts, stocks for today?
CDSL, buy CDSL with a stop under 1620.
Okay. All right, gentlemen, got that. Let's quickly hop across to Mangalam now. Remember, the big bazooka that Asian Paints delivered yesterday, double-digit volume growth. Very interesting brokerage commentary coming in. And Mangalam, I did note a lot of brokers are calling. Remember, we were discussing this yesterday. The stock's high was 3,500. Now, is this that re-rating moment? I noticed a couple of these broker reports are actually calling for 3,000 plus.
It's a funny world where sell-side analysts, when there was a disruptor, were the first to say, oh, this is now an anti-consensus sell on Asian Paints. And now as things are turning, everyone's fighting to be an anti-consensus buy. And that's exactly what the consensus is right now. You have Nomura, which says that the second quarter was a beat across parameters. They maintain their non-consensus buy, and a target price, which was earlier 3,100, has now been lifted to 3,275. Remember, they upgraded the stock just a couple of weeks ago. On the other hand, ICICI Securities says that they're focusing on core business drivers and there is some deceleration which is expected in competitive pressures in the near term. And guess what? They also maintain non-consensus positive stance and they have a target price of 3,000 rupees. Jefferies has increased their target price to 3,300 rupees. They have a buy. And HSBC says that their FY27 expected EPS is 10% above consensus. So they have also raised their target price to 30.50 and everyone largely is positive.
So non-consensus is the new consensus.
Is the new consensus.
Yes.
Well, markets are opening. Mangalam, thanks very much for that. 25,876. Nifty is flattish. The Nifty Bank is kind of flat as well, but just about starting, right? 58,171 or so. Sideways. You got the mid-cap index, which is up or not. It's flat. Nothing. 2-point change on the Nifty mid-cap index. There's a 60,000, 61,000 index. And I think the small-cap index will come up on your screen as well. And that is up a little bit more. Actually, yesterday, the small-cap index was sulking. Everything else was roaring. So maybe a little bit of a pullback there. Otherwise, it's a very flat start. Nifty 50 heat map will come up on your screen, gives you a sense of where we are starting this morning. And then we pick it up in terms of individual names. So it is more down than up. Asian Paints on one end, what Mangalam was talking about just now. And on the other end, you got ONGC, BEL, Eternal, and others. Surabhi.
Okay, so let's take a look at the movers and shakers. Honasa, by the way, is 9% higher. 9%. I mean, really going great guns. It was just open on my screen here. So that's really the stock of the morning for sure. But on the large cap screen, things are a little quiet. We're about 40 points down on the Nifty. So let's figure out what's down. ONGC and BEL from the PSU pack lower. Eternal is down about 0.5%. Remember, IT has had such a phenomenal week so far, so some of that is coming off. A little bit of profit taking. TCS, HCL Tech, Infosys, all these stocks have a tinge of red on them. Bajaj Finance is down another 0.5%. HDFC Bank is down about 0.5%. The Bank Nifty itself is down about 90 points at this juncture. So there's no one major stock that's kind of leading to this decline, but general sense of profit taking. On the upside, it is still Asian Paints, 4% higher, building on those gains. Tata Steel, the other one that's reported good numbers, 2% up there. Actually, even Hindalco is doing pretty okay. So metals are chugging along. Bharti Airtel and ICICI Bank are the other two big stocks that are ensuring that they provide a bit of a counter to the downside thrust on the Nifty. By the way, the mid-cap index has just broken in positive territory now, Nigel.
Well, that's right. The few stocks from the broader markets, I think they deserve special mention. Aether Energy, we told you that, in fact, there's likely to be a large trade. That large trade got cleared out of the way. Post the large trade, the stock, in fact, is zooming up. It's up close to around 4%. Massive volumes in that particular name. Honasa has done quite well, as you already pointed out. A few other names, Cupid. Stock is up 2.5%. The numbers look quite good. And they're sticking by their guidance, top-line guidance, and guiding for even better times to come. Net profit of around 100 crores is what they're talking about. So that's why one of the top volume movers. Grow continues to moving from strength to strength. Was up 30% yesterday, up another 3% today. And since silver prices perked up overnight, you have some traction on Hindustan Zinc as well as Vedanta. The street is hopeful that the demerger ultimately goes through. On the losing end, Kochi Shipyard, Kitex, as well as Ircon. All three of them are losing out. So for starters, Nifty down marginal, 25 points or thereabouts. Breadth of the market, though, is encouraging just in the first few minutes. Let's see how this goes.
Oh, absolutely. And I think there's enough out there, right? So Grow is the number one volume-led gainer on the index. And I think market cap should be, inching closer to a lakh crore? Not already, right?
No,
I think
84,000 crores. Yeah.
So yesterday, 30% by close, another 3%. It's of course an interesting one. Asian Paints, right? 10% in 2 days, and I think now for the month so far, that is in November, it should be up over 12%. We've got Honasa, which continues to power higher, strong numbers, and large volumes. More than the price action. Data Patterns is up about 6.5%. Silver Bees making a comeback. Did we see a silver move last night? 4%
yes.
On Silver Bees. Aether Energy, that block out of the way, 5% higher. Yatra was a big mover yesterday. RK Forging, Nazara is up. Universal Cables reported very strong numbers, 14% higher on this one. So you got lots of stuff. Indigo Paints, right? Absolutely bombed out name, but has been moving from about 1,000 rupees in 4 days back to about 1,200, nearly 1,300 now. So Care Ratings is another one, which is up about 7.5%. More of these listed silver ETFs, they're all coming up about 4-5% as we start. Cochin Shipyard is down 4.5%, maybe the number one volume-led loser across on the NSE right now. Okay, more stocks in a bit, but we've got a very special panel right here in our studios. Vikash Kumar Jain is India strategist and head of India research at CLSA India. We have Nikhil Gupta, India economist at CLSA India as well. Gentlemen, great to have both of you here. So the context, right? The conference is kicking off coming Monday. Coming Monday. It's kicking off coming Monday. So I just want to start with that, Vishal. What are you aiming to do, and what should we expect out of the conference?
So this is likely to be our biggest India conference in terms of participation. We're looking at well over 300 plus investors joining us, nearly 100 plus companies or so. And what we are trying to do is basically what CLSA is known for, that is to offer unrivaled corporate access, as well as look at themes that are making headlines that are important for the markets at this juncture. What are the themes that are important for the markets? We have a lot of AI this time. We have a lot of global macro. We have a lot of Indian macro. We also have things like defense that we look into. Consumption is always a favorite when looking at India. So that's the other thing that we delve into across the various presentation, and a host of senior management CEO tracks which are there. So, and along with that, on the sidelines, a lot of very interesting conversations. That's what we'll offer at the conference.
Nikhil, for you, it's the first
CLSA conference.
And how's it been so far?
So far, so good. Very excited for this conference.
Yeah.
And as Vikash said, this is going to be the biggest CLSA conference, so I would like to take some share of that.
So markets, macros, right?
Yes.
You think more questions will be markets or macros? Because both are, now of course, the big market question is when will nominal growth pick up?
I think the macros have been quite well behaved in India, and I'm sure you'll talk about that. It's the market that's been a problem. So.
No, but growth, underlying growth has been poor, right? And I think is that the big talking point? When will that start to recover?
In fact, we'd like it to be the big talking point, because that's where India is getting better. Because I think I'll allow Nikhil to talk about it, but that's not where the complaint is. So,
but also, Vikash, you're starting off the conference against a backdrop of a largely positive view on Indian equities, right? Which is interesting. And before we get into the macros, explain to us why you think India can finally start playing catch-up in an otherwise great global equity bull run. We've just been completely singled out, and we know the reasons, right? We don't have AI, we don't have deep tech, valuations were a concern, we were delivering 5-7% earnings. What makes you confident that this is all set to change?
Yeah, I think so. That's the report that we wrote about today. The interesting thing is, if you try and understand, and for someone who's just a domestic investor, it's very difficult to appreciate what kind of a global bull run we've seen. So what we do is we look at the top 25 or so markets. These markets make up about 85% of global market capitalization. 65% of them have made a new high this calendar year. Last time when you had anything more than that was in 2007, when 70% made a new high in a calendar year. India is not one of them, which is very odd, because if you look at India, India is one of the few markets that if you look at this particular century, 25 years, it's made a new high in 19 out of those 25 years, which is the highest for any market. So it's the most consistent performing market. But what changed this year? Yes, some of those things that you mentioned did change. Yes, that should have taken excitement to other markets. However, the underperformance that we have seen in India is the biggest 12-month underperformance we've seen on record. That is versus EM, versus Asia X, versus the global benchmarks. The reason was India, in the minds of global investors, due to certain events, got relegated. So if you remember, just to kind of jog your memory back, say in February, everybody in the US administration was, India is possibly going to be the first one to
do a deal. Yeah.
Even till April, May.
Yeah.
That got relegated to now. India is the one with the highest tariffs, almost. In fact, higher tariffs than China at this juncture. So, plus you have the geopolitics, which is always a structural risk which can become hot and, because we don't really have the best of the relationship with our neighbors. That is always a thing which can come up as a risk from time to time. It did come up this year. So from that perspective, there's a slew of these negative news flow, which also caused worries around, okay, what will happen to GDP growth? I think, and we had earnings decline. In fact, if you were to track back and look at performance, our worst performance has been in periods where we've seen earnings getting reported. This time, it's not the case. So a lot of all of this is now going to kind of reverse, in my opinion, with the US president already talking more positively. Suddenly, that fear that India-US relationships is kind of going to become really bad, that should reverse. Plus, our earnings growth numbers are doing okay. GDP numbers, of course, Nikhil's going to talk about.
How much are you expecting this year and next year earnings?
So if we look at consensus, I think, as a strategist, I pay a lot of attention to that. If you look at FY28 over FY26, there's a 16% CAGR over 2 years that is expected. As compared to, if I were to look at that FY27 over FY25, that had gone down to almost 11% or so. So there's a that also puts us better in terms of earnings growth ranks. Only Taiwan, Korea, and 1 or 2 other markets are better than us. So all of those become much better, and headline news flow improves. See, if headline news flow is bad, you don't want to really, your focus on long-term growth reduces. If that starts improving, then the whole long-term growth story can come back.
So headline news flow, basically, India-US trade deal has to happen.
Trade deal along with other macro things which are anyways improving, which I think Nikhil can answer better.
So is there a high probability that India outperforms from here on, and the FI money that's deserted us for the last many, many months, close to a year or so, do you think that comes back?
Yeah, I think, outperforms means that outperforms what? See, I think it is, if this is a global bull market on the theme of AI, it is going to be very difficult to outperform the AI stocks if the bull market continues.
Right.
But selectively outside of that, the kind of underperformance that we have seen, that's pretty stark.
Right.
So versus a few other things, definitely India should start doing better. So from being relegated to right at the bottom, it has reasons to come back kind of at least in the middle.
Can we Nikhil, macros, yes. What's the view? Will growth pick up? What do we have? Are there enough ingredients?
Yes, so Prashant, if you look at India's macro numbers, and you pointed out
I'm not talking about the macros, they're all very good reserves. I'm not talking about that. I'm talking about growth, nominal growth. There is enough in the tank for that to start to fire in a more meaningful way.
Okay, I tell you the numbers which we are expecting it to be. For this year, we are expecting nominal growth anywhere between 8.5%. To be precise, 8.4% for this year. And we are expecting it to pick up to somewhere around 9.5% next year. The important thing to note is next year will be the third consecutive year of sub 10% growth. In fact, our forecast for FY28 is also about 9.8, 9.9. So we are broadly saying we will remain sub 10%. Now, that will definitely look much weaker to almost all who have been invested into the market or looked at India's economy for a long time. The question is, or the way I look at it is, we are now a $4 trillion economy, right? We are now the 5th largest economy. So the size actually matters, right? How long can we continue to grow 12 to 14%? We know we have certain expectations and we want our economy to grow at a certain level. But it is just not possible the bigger we become, right? Yeah. Not only that, we also need to understand what is happening globally. If you talk about 1970s, 1980s, 1990s, or even 2000, at least till about 2007, there was this entire globalization wave. Trade used to grow at 1.5x of global GDP growth, right? Then it grew in line with global GDP growth till about 2019. And in the last 5 years, I mean, protectionism as a policy has started becoming more prominent beginning 2008. But post-pandemic, it has actually picked up at a different level. And I think all of that will reflect not only in global GDP growth, but India will also be affected.
Nikhil, will foreigners buy this argument? I mean, we are still a poor country, right? Under $3,000 per capita. At this stage, if you're talking about, okay, let's settle with under 10% nominal growth.
Right.
I mean, that is, it's not the promise that we made.
Promise we made to who?
I mean, all of us.
The world at large.
Okay, right. Okay, so from per capita income perspective, if you look at, let's say if I grow at 9.5% nominal growth, and then a depreciation of 1.5%, let's say, loosely speaking, so 8.5% in nominal terms, and then a population growth of about 1% or so. Actually, it is below 1% now, which means we are going to grow our per capita income in US dollar terms, 7.5%. I don't think it's actually bad. I mean, if you do the calculation, we'll soon, I think by 2014, and please don't hold me to this, I'm just giving you a rough idea of the calculations that we did. About 2040, we will be $10,000 per capita income, and about 2047, which is the centenary.
By when 10,000?
2040, by the end of next decade. And by 2047, I think with these kind of forecasts, we will be $15,000 to $20,000 per capita.
You know, before we talk more granular about the market, Vikash, I just want to go back to a point that you made, and that really caught my attention. When you said the geopolitical, risk premium or whatever you want to call it. Now, the events that happened in April here in India, and we've had an unfortunate incident in Delhi again. So are you saying that that has come in on India as an added factor to watch on a consistent basis? Because that becomes another then issue that one has to contend with while you're trying to map FPI flows. And I mean, have you heard, what is the commentary you've heard from foreign
So what I
clients on
meant,
this?
let me clarify that, is that, see, the fact that we don't have the most friendly of neighbors is a reality. But if nothing happens for a long time, then people forget about that risk.
Yeah.
If something happens, then that risk comes at the forefront.
Yeah.
So amongst a lot of complaints that people had on the market, this became an added complaint. If something like this comes up, then you don't want to think about long-term growth. So all of these things need to subside. And which is, I think, what will happen over the coming weeks and months.
Okay, all right. Nikhil, let me get you into the conversation now. We've got this very, very tepid inflation prints that are coming in there. What do you expect from the RBI in the upcoming December meet?
All right, so our forecast, we still maintain 25 bips rate cut in December, and we expect another 25 bips in February. However, with this 0.3% inflation that came out yesterday for October, I'm sure the noise for a 50 bip rate cut will become louder. I still believe, if you look at the details, we know that it's purely the food inflation. The core inflation has actually inched up last month. And even now, of course, it is much lower than RBI's forecast that they provided us in the last meeting. But even now, we believe that headline inflation will be back to 3.5% to 4% by the first quarter of FY27. So by mid-2026, we'll be back to 4%. And that is why I believe it's better. It may be possible that they do 50 bips rate cut in December, which is not our base case. But then I believe that would be the end of this rate cut.
But Nikhil, there are some who are arguing, and we were discussing this with Lata just a while back. There is also that counter-argument that if you're looking at roughly ballpark 7% GDP growth this year, then is there a need to move immediately now after having delivered 50 basis points, or would the RBI look at deferring it? And if that is the case, if the RBI decides to be a little conservative, hold their firepower, then the market implications of that, I don't know if that's been factored in.
There will always be factors on both sides of the game, right? So 7%, definitely we are also expecting 6.9% real GDP growth for this year, but this is divided into two halves. The first half till September 1st and second quarter, average growth we are seeing will be about 7.8, 7.9. Second half will be about 6%, which makes it around 7% for the full year. So yes, they may want to hold on, but inflation of 0.3%, I mean,
doesn't get better than that.
The only time since 1990s when we have got lower inflation, or less than 1% inflation, was for 3 consecutive months at the turn of the century. That was October, November, December 2000, when we had 0% inflation. Apart from that, we have never seen lower than 1%.
0% inflation is also...
and sorry, one more point.
Over here.
Just one more point. This is first month. We expect inflation to remain below 1% in November as well. So
on a lighter note, I'm just trying to understand, 0% inflation sounds great in discussion. Do you feel that your bills have gone down?
Yeah,
Do you?
You don't see it when you...
I don't think so. I think everything is going up.
When you get your paycheck, you don't see it?
Yes.
Now we're talking.
Disinflation, that's disinflation.
That is what matters for growth perspective.
Okay, let me ask you this other big thing, right, which is AI. I think both of you would... So one from... Nikhil, you start first. In India, right? This big consumption thing, not just here, everywhere. I mean, who is the consumer? Is a white-collar worker, right? And I think you've done some work on this in terms of whether AI... and the market on the question on AI, Vikas, I'll come to you. But do you think it's a risk here in terms of it may not immediately
employment
show
or
employment, income growth, employment? Is there any way to tell at this stage?
Right. So, Prashant, see, AI, of course, is the theme globally at this point in time, and we need to understand it is led at this point in time by the US and China, right? For most of the Western world, if you look at growth, there is another way to look at growth story, which is from labor market perspective. You look at the growth in employment and you look at the growth in productivity. Most of the Western world and China also, they have reached a limit in terms of pushing their employment growth higher. So if they want additional growth, it has to come from productivity. India is not at that development stage. We need still at least 7 to 8 million jobs every year, and employment growth has been the primary driver of growth for India. And for the next decade as well, that is going to be.
Is there a risk that gets disrupted?
That gets, sorry?
Disrupted. That we need that, but you think
possibility,
it's a risk?
Because we need to understand the globalized world we are living into. Even if we want to focus more on labor employment growth, companies cannot avoid the competition that they are getting from the competitors outside India. So if someone else is becoming more technologically advanced, because of which they are becoming more efficient, which is making them more competitive, our Indian companies also have to do that. And that puts a risk on if they will be able to grow their employment or jobs at the same rate where we want it to.
Vikash, we had Naren with us, and he said the biggest risk to India, the question is still AI, but from a market perspective, is not local, but is global, that the AI bubble bursts. Any thoughts at all?
With all due respect to Naren, of course, he knows more about markets than me. But, I would say that, yes, that's not something that we should wish for, because if there is a, burst...
No one is wishing for it, but I mean...
No, I'll tell you, because some arguments are like, I don't want to look at India because it lacks an AI.
Correct.
So some people are feeling that, okay, if the AI story kind of goes down, and that's the point where India comes back. But yes, eventually it might happen, but India is still an expensive market on an absolute multiple basis. If there is a global correction, then multiples will contract. And even India will see the correction. But in general, to kind of, segue into what Nikhil was saying, I have a slightly more optimistic view on AI in India. See, I think what our true strength is a very young population, which what that allows us to do is be great adopters. All of us, we might remember that we hardly had anything called a 3G. It never worked. There was a time, not even 10 years ago, where people like you and me used to struggle to use even 1 GB of data in a month. When 4G came, we leapfrogged. If you look at even something like payments, digital payments, we kind of leapfrogged and caught up. Unless you believe that AI is a completely different animal, and the winners will be the ones who provide the AI service, which did not happen with internet. Which in fact, I would say, even the ones who are providing the 4G service, they are not the biggest of winners. The winners are all the other apps which mushroomed around it, which people could use. So it's really, how do you put that to use? To put that to use, you need early adopters. And that's where I think the Indian population might eventually come in. But all of this is not what people will focus on at this stage of the global bull market. But eventually, I'm not that not that negative, because I can say that we are great adopters, or you can say we are great cloners also, and I think cloning is something which makes a lot of things successful. You don't have to really have all the money to invest and test.
I'm not sure if that is the reason, or maybe the reason is more tactical, that you actually don't have a very negative view on IT. I don't know if you're seeing some shred of evidence that they're coming up with some ingenious idea of using AI better and then, charting the next phase of growth. Because I don't think you're very negative
in fact, I have
IT,
a contra-positive opinion.
Exactly, yeah. So explain that to us.
There are two reasons for that. Number one is, I think this India, don't think of it just a trade thing. But all of these headlines meant that India-US relationship is kind of going down. If that starts reversing, then that should be positive for IT. And secondly, when people are trying to implement AI adoption, that's where I think even our IT services companies will be used.
They'll fight back.
Used, and they will get their contract. So initially, it could be good for them.
I'll urge both of you to come back. It's,
We've not even started
12, 15 minutes is too less, but that's what we are doing right now.
I'm sure you can carry these conversations with our colleagues during the conference.
We will. And best of luck to both of you for the conference. The fantastic duo from CLSA. Thank you very much for joining us here. Well, it is conference season, and our colleague Nimesh is at the UBS conference, right? And he's got Miki Doshi, country head at UBS, from the sidelines of that conference right now. So let me throw it across to Nimesh. Nimesh, morning.
Morning, Prashant. Yes, it's a conference season, and I'm actually at the UBS conference. It's day 2 for UBS, and joining me now is Miki Doshi. He's the country head for UBS in India. Miki, thank you for joining us. I normally catch you only in Singapore. This time, I'm lucky to have you in India. Straight to the markets, India has been a rank underperformer for the last 12 to 15 months, and all of the Asian markets have done really well. What's the mood from the FIs at the conference, and when you think this tide can turn as far as India is concerned?
Nimesh, thanks for having me on this show. You're right, I don't tend to come on TV very often. Last you saw me was at our Asia conference. But this is a big event for us at UBS. This is our second year of the conference after we integrated with Credit Suisse. The turnout's been superb, like you rightly said. The FII turnout and even domestics have been around. I think the mood is clearly one of wanting to see the opportunity and see what the the investment outlook looks going forward. Yes, you're right. It has been a rank underperformer. China and Korea, as you know, have been clearly beneficiaries of less flows into India or outflows out of India into those markets. Multiple reasons. I think some of the flows have gone into the IPOs. We've had a robust IPO calendar this year, continue to have one next year. So that's part of the reason why. Secondly, I think Liberation Day obviously wasn't very favorable for us, which I think, again, we're hoping that that changes going into 2026 and is positive for us. So yeah, the mood is upbeat. We actually had the ex-deputy governor of the RBI yesterday. Yeah. Again, very supportive. He thinks RBI is going to be out there and supporting the growth in this country. So I think, yeah, it's...
I'll ask you about banking and RBI stance as well. But you spoke about Liberation Day, and since then we've actually underperformed.
Yes.
You're having Piyush Goyal at your conference today, though it's virtual. But as a house, what are you expecting in terms of the India-US deal? By when you think it will see the light?
When it will see the light, I don't know. The hope
but
is...
You're hopeful?
Very. Oh, extreme. I think it's in the interest of both countries, actually. We're no longer a country which anybody can neglect, right? I mean, and if you've seen what our Commerce Minister has done in the last, I guess, 18 months, from Switzerland, Luxembourg, to Norway, to UK, to New Zealand, one by one, we're getting our agreements in place with various countries, right? And I think the US is going to be right up there. So am I hopeful? The answer is 100% I'm hopeful.
So what's the base case at UBS? That the 25% extra will go and the base 25 will remain, or even that will be reduced further to sub 20?
We have not actually done, I personally have not taken a view on that. I think at least as first case, the base case should at least be that the top 25% should go.
Okay. Coming to banking, Mickey, you spoke about a deputy governor at a conference. The biggest FDI in the last 1 year has come into the financial space. Never ever we thought of in the last 15-20 years that Etihad Bank will get an access of 60% stake in RBL Bank. It's unheard of, right? What's your sense? You've been a banker for so many years. Right time to open up the banking sector, and you think more deals will come?
So first thing is, I think clearly the financial sector is a proxy to our large population, right? 1.4 billion people, 1.5 billion people. The consumer play in India, if you play it via financials, there's a great way to play it. Yeah. India has had some world-class banks. Yes, you're right. Historically, the RBI was quite stringent on allowing foreigners to come in. If they came in, licenses were given, with a certain business plan. Growth was controlled by them. And I think there was no harm in the way we approached it. I think we've had some, ICICIs of the world, HDFCs, Kotaks, would not have happened that easily if you just allow them to come in the manner if they may have wanted to. I think going forward, yes, it's a mature market. I think there's need for a synergy between what the global banks can bring to India in terms of products, in terms of the reach, etc. So yeah, I think the time is right, and I can see more of this happening. Okay. I think the dialogue which we actually as a house have with a number of jurisdictions where people are keen. If you ask the Japanese, they're keen to expand here. They ask the Koreans, they're looking for opportunities. So yes, there is keenness.
Okay. You briefly spoke about IPO as well as one of the reasons why some bit of FI money has moved from secondary market to the primary market. You've seen so many IPO cycles in the last 20, 25, 30 years. What do you make of the quality of paper that's hitting the market? While there is an argument of valuations very steep for some of those recent listings like Linkard, but what's generally your sense of the IPO paper in India?
So you're absolutely right. There have been multiple cycles and cycles which have not worked out for many corporates or for investors, right? And go back to the Y2K 2000 boom era, where there were a lot of small companies coming to the market. The one thing if you notice now, the size of the IPOs, right, are clearly differentiated from the past.
Yes.
And I've always maintained that it's easier to get a large IPO done than a small IPO done, right? The size of assets which the domestic mutual funds and of course we've always had the global investors coming in, it's huge. So to make a difference in the portfolio, these large IPOs. So I think what we've seen is most of the IPOs clearly at the right valuation have done well. and I continue seeing that. I think we've seen the other advantages, it's no longer just a single economy, or it's across sectors. You're seeing the IPOs coming out. I mean, I was just looking at this morning's papers, from defense to education to consumer. You can buy glasses, etc. So I think it's a very varied sector. India is no longer just a 2-3 sector market,
Sure.
and I think it's going to continue. I think you see that in our pipeline too.
Sure. I want to ask more about the UBS, strategy in India, because, and I'm asking you because, recently we saw the deal of UBS buying 5% in 360 ONE, and you want to eventually, build this wealth business.
Yes.
As a theme, how much bullish you are across the capital market theme, whether it's wealth management or exchanges or brokerages?
Like I said earlier, right? Financial services is clearly perfect for playing the consumer market, right? I think and it could be across the whole chain of retail to ultra high net worth, in terms of wealth management, in terms of investment banking, in terms of broking, pure corporate banking, right? We've seen how banks have grown on that side. Extremely bullish. I think yes. The reason we did this deal, or the hallmark of this deal, is you're combining the largest wealth manager in the world, the premier wealth manager in the world, with the largest standalone domestic wealth manager, asset manager in India, right? I think it's a win-win for both, providing access to our global clients to come into India with 360 ONE, and as you're seeing the markets open up for domestics to go overseas and various.
So the plan is to stick with 5% in 360 ONE, or you want to increase further going forward?
I think it's early days.
Okay.
We've just got, the marriage was consummated in April. Other agreements have just been signed. I think we'd like to see how it plays out. But clearly, I think it's in the interest of both that it grows. I think even when we did the announcement in April, we did say that this is the start of the relationship. So I'm hoping.
Okay, well, that's Mickey Doshi at UBS, and talking about the markets, foreign participation, size of IPOs, and of course a bit about sectors as well. Interesting conversation, and we'll put out the whole thing, play out snippets through the course of the day, and of course you can find the full thing online on CNBC-TV18's YouTube page. Well, time for a quick commercial break here. We're going to come back in just a bit from now. The Ashok Leyland management talking to us. We'll have Shenu Agarwal on the other side. Stay tuned.
Welcome back. So the market is absolutely flat as it can be. It's all about individual stocks, really, the headline grabbers. So Asian Paints, for instance, are up and about. Honasa, 6% higher. Data Patterns, a very, very strong quarter from Data Patterns, and that stock surging 8% higher. So it's really very granular down to the individual names, and largely the moves are being led by earnings. More on this as we go along. In fact, speaking of earnings, let's put the spotlight on Ashok Leyland now, because the company also reported a pretty strong set of numbers for the quarter gone by. The margin came in at a multi-quarter high. There was healthy volume growth as well, which boosted the top line. We have with us Mr. Shenu Agarwal, MD and CEO at Ashok Leyland, joining in. Mr. Agarwal, thanks so much for taking out the time and being with us. So, the first half has been largely muted and subdued for the CV industry, but it seems that now there are some green shoots. The GST rate cut has been delivered. The festive season seems to have driven up sentiment as well. How confident are you of sustaining a good performance in terms of growth in the second half?
I would say that GST rationalization is really helping the CV industry. For last many quarters, we were saying that there is all the macroeconomic factors are favoring the CV industry, but why there is not an uptick? We were talking about the replacement demand. We are talking about the aging of the fleets. We are talking about better fleet utilization. So everything was working in favor of the industry. I think this is a moment when that trigger can potentially happen, when customers can come out and start purchasing new trucks and buses. What we have seen in October is definitely very positive. MHCV industry has grown by 7%, which is much better than 0, 1, 2, which we were witnessing in H1. And LCV has grown by 15%, which is again much better than -2 or +2, that we were seeing in H1. So I think this is a good sign. And last time when we spoke, I was telling you that other than just a price cut, I think what matters more to the CV industry is that the whole consumption will get a boost because of this GST 2.0 plan. And that is really happening. We are looking at all the numbers every day in newspapers and in media. And, this consumption boost is really driving the demand of the freight. If the demand for the freight increases, irrespective of the price, people will go and will buy more trucks to fulfill that demand. And that is, I think, what should happen in the coming months. If the consumption stays up, which is expected, prices, of course, have gone down, right? And then I think it is a good combination for the CV industry, and we should see a much better H2 than what we have seen in H1 or some of the previous quarters.
Okay, so what sort of makes up very good or a much better? Are you still maintaining a mid-single-digit growth sort of projection, or could it be actually high single digits or even better?
Very early to say. I mean, at the beginning of the year, we were saying mid-single digit for MHCV and maybe slightly better for LCV. I can tell you right now, based on the indications that we are receiving, that I think we'll beat that target handsomely, that estimate handsomely.
Mr. Agarwal, how are things looking on the market share front? After several quarters, you had managed to reach to the levels of about 30%. Is there any uptick from those levels in the heavy commercial vehicle segment?
H1, we are at 31.0 in MHCV. And H1 last year, we were at 30.5. So we have grown about 50 basis points year-on-year basis. But you know that we were quite stuck at 29.5 and 30 for many quarters. And it's very good to see that now we have broken that barrier and we are moving towards 31. We have achieved 31, and therefore now we should try and touch 32 and beyond.
Okay. In the bus segment, you have, quite a few players, and your market share has been, however, still at 40%. So you continue to be very, very large. But if you remember correctly, in the first quarter, the market share had dipped somewhat. There was some demand shift that was noted. So what has the market share trajectory been in Q2? And specifically, if you could talk about the ICV segment.
Yeah, so listen, we are the leader as far as the buses are concerned. Overall bus segment, we are number one, and we are number one by quite a margin. Our market share is still hovering around 39% or so. And I think the number two player is approximately 10% lower than ours. And number three is then further 10% lower. Right? So we have a commanding lead in the bus segment. The area that we wanted to focus within the bus segment is the ICV bus, which is the light and medium duty bus, not the heavy duty bus, because in the heavy duty bus, we had 70-80% market share. But in the light and medium duty, or what we call ICV bus, we had only 15% market share. Now, that is what we were focusing on for last couple of years. And I'm very happy to tell you that there we have achieved market share upwards of 25% now. We don't want to stop there because ICV bus comprises of 2/3 of the volume of the entire bus industry, right? So volume-wise, it is very, very important that we have grown our market share from 15 to above 25%. Our target is to get to 40% in ICV. So we will continue to focus there and further do things to increase our market share. In MDV buses, in heavy-duty buses, it is a fact that we have lost a little bit, but there is nothing concerning. It's just 1.5% that we have lost because of some regional issues, which we are correcting. So I think we are very strong. We are getting more stronger, and definitely will continue to have that leadership position.
Mr. Gaul, it's another quarter of bumper growth in exports in the first quarter. It was nearly 30%. And in Q2, you've done 45%, but still maintaining your FY26 target of between 20 and 25%. So why not, move that number higher? Can we expect an uptick in this target that you put out?
Sometimes, looking at quarters paint abnormal situation. But there would be some quarters where we would be having 30, 40, 45% growth, as we have demonstrated in Q1 and Q2. But see, look at the long term, because this is not a quarterly business really. So 3 years ago, our volume was 8,000. And we said, in 5 to 6 years in the medium run, we want to treble that volume to 25,000. So I think let us look at that trajectory rather than the quarterly trajectory. From 8,000 in about 2.5 years, we have come to 15,000 last year, 15,000 plus. And now we want to go to 18. And then in another couple of years, we want to go to 25, right? So we are running in this medium term, we are running very, very, very good, very fine on our plans. So we are very happy. This year, if we achieve 18, I can tell you that we have all the masala in place to get to 25,000 in next 2 to 3 years.
Okay, all the masala is in place. Got that. Gives us nice little bit of color. Finally, sir, in the last 2-3 years, your focus has been on diversification, and internationally, you've been reducing the truck market share from 60% to now about 50%. Can you give some more details in terms of how you will keep going forward with this diversification strategy?
This has been another strategic lever that we were pursuing for last 2 to 3 years for various reasons. So non-domestic, non-truck market used to be only about 35 to 40% for us, right? And therefore 60% plus market was domestic truck market. Now, a lot of people, it is a fact also that domestic truck market was very cyclical in nature. Every 2-3 years, it will have a upside, and then after 2-3 years, it will have a downside. And therefore, a lot of people were concerned about Ashok Leyland because they thought that we cannot deliver a very consistent performance. Now, this is the 11th or the 12th straight consecutive quarter where we have delivered double-digit EBITDA. And in every of these quarters, we have delivered more EBITDA than the previous quarter YOY basis. Now, the reason for delivering this kind of a performance is that we have really reduced our dependence on domestic truck market, right? And we are very much focused on exports. We are very much focused on parts business. We are very much focused on power solutions, defense, and some other businesses. And we have done really a good job. So domestic truck market, where our dependence was 60 or 61%, has come down to 50% now, right? And that all these non-CV, non-domestic businesses are also margin accretive businesses, which means their margin is much more than the truck margin, right? So I think this whole lever has really helped us in making a company which is much more resilient. You would be surprised to know that our break-even used to be about 6,000 to 7,000 units a month of MHCV trucks. And now we have reduced it to 1,000 to 1,200 units a month, while our monthly sale is 10,000.
Mr. Agarwal, more questions, but out of time, sir. Good luck with the business as you continue to execute. Look forward to more conversations. Stock's doing very well, 4.5% higher. Appreciate it very much here on CNBC-TV18. The market, by the way, is absolutely flat. So blinking red and green, 25,877. Vinay Rajani is with us, Senior Technical and Derivative Analyst at HDFC Securities. Vinay, good morning. Good to have you here. Just your trade from here. It's tricky, right, Vinay? Because you've got the election results tomorrow out of Bihar. For whatever it's worth, maybe, especially for traders more than anything else, I'd like to qualify that. But what would you do? What would you recommend?
Yeah, so good morning. And yes, sector-specific bullishness is still continuing. The sector rotation is also going on nicely. Yesterday, we saw a breakout in the pharma space. Before that, we saw a movement in the oil and gas and IT stocks. So sector rotation is doing good, and large cap stocks are especially looking good. And as far as Nifty is concerned, by recovering more than 600 points from the lower level, Nifty has retraced more than 61.8% of the entire downward move which we saw from the high of 26,100 to 25,300. So this was a healthy correction, and we have retraced more than 61.8% by crossing 25,800. So this is a good sign which is negating the potential downtrend, and there is a good probability that Nifty would continue to remain in an uptrend, will cross the 26,100 hurdle and ultimately post a new all-time high. So looking good as of now. Sector rotation is going on nicely. Breadth is improving nicely. 2 days are left for the mid-cap, small-cap companies to post their result. But I'm expecting that after result season gets over on 15th November, we can see momentum coming back into the mid-cap space as well. So as of now, we are asking our traders in the Nifty to keep a stop loss at 25,700. That was the lower band of the gap which was formed yesterday. So 25,700 is a support. By keeping that stop loss in mind, one can remain long, and we can expect the Nifty to cross 26,100 first, and then we can expect an all-time high about 26,277.
Okay. All right. And individual stocks, any specific trades for now?
Yeah, so as I said, there is a breakout in the pharma sector yesterday. It has broken out from the consolidation which was there. And after from this particular space, I like Lupin. So Lupin has given a nice momentum in yesterday's trade, and follow-up buying can be seen in today's trade as well. So 2048 is a level one can go long for the trading purpose. Stop loss should be kept at 2020. And on the upside, I'm expecting a short-term target at 2100. Second stock I would pick from the metal space. So metal has been into an uptrend. In primary trend of the metal sector has been quite good. And today again we can see a resumption of an uptrend. And SAIL is the stock which I like on the charts. On the positional chart also, it has formed a nice inverted head and shoulder pattern. So SAIL can be traded long for the trading purpose also. 144.50 is a level around which one can go long. I would suggest a trading stop loss at 141. On the upside, I'm expecting a target of 149.
Got that. Thanks very much for that, Vinay. It's good getting those trades for our viewers. Well, we want to talk about Honasa, right, which has seen a complete turn from last quarter. A big negative has become big positive. You look at net earnings and other matrices. Stocks up about 5% off the opening highs, but still looking strong. Mangalam is here with details. Mangalam, morning.
Good morning. So it's a very good set of numbers coming in from Honasa this time around. Second quarter running, the company had about 4 quarters ago undergone this distribution reset. Project Neve is what they had started. And now that's starting to bear fruit. In fact, the revenues are up around 16.5%. The underlying volume growth is 16.7%, which is the fastest that we've seen in the consumer space so far. The EBITDA is a positive 48 crores versus a loss of 31 crores, and that's percolated all the way to the bottom line, which is a profit of 39 crores versus a loss of 18.5 crores as well. But additionally, the company has, adjusted its revenue recognition method for Flipkart. So now they do a net revenue as against the revenue minus cost of services. So if you adjust for that, the revenue growth is actually a lot better. It's up around 22.5% there as well. What took the EBITDA higher was better than expected gross margins, and at the same time, the ad spends leverage also coming by for the company, which were earlier 40% of sales, are now closer to 33.5% of sales, and other expenses are down as well. So all these factors pointing towards the north for Honasa, and the stock already going into numbers was about 28% away from its 52-week high, still a fair distance away from its issue price at 324 rupees as well. So the street likes this performance. In fact, brokerages too have upped their estimates.
Well, I think, Mangalam, real turn, and let's see, hopefully we'll get a chance to speak with the management as well and pose some of these questions, whether the turn that we've seen in the quarter is durable. At the bottom of the screen, there's a flash with regards to IndusInd Bank. The Mumbai EOW is essentially saying there's currently no further inquiry. We are doing no criminal conduct so far. So at the margin, a bit of a positive bump. Stock, by the way, has been running, right? I mean, 3 days back, 2 days back actually, it was at $800. It's moved up 10% in 2 days and this morning included. So there is some action which is definitely underway there. We'll take a break. We are back. Manisha is going to join us with some focus on commodities. What's top of mind coming up in just a bit.
Welcome back. Well, the equity market at the index level is having a quiet session so far, but let's focus on commodities. Remember, Manisha told us earlier that crude made big headlines. It fell quite a bit overnight. Let's see what else is happening. Manisha, fill us in.
Oh, well, it is crude oil prices which have declined quite sharply. I could have spoken about gold and silver, which gained 2 to 4% overnight. But this headline is clearly from crude prices because the decline has been really sharp. We are trading at a 3-week close with the kind of decline that we've seen. And with that, it nicely brings us below $60 a barrel for the WTI prices. And the Brent, which was trading at 65 last week, is trading at just about 62 right now. Well, to begin with, it is about the OPEC meeting. And of course, the broader liquidation of the futures contract. A lot of people seem to be closing their positions way ahead of the holiday season, and that is what seems to be bothering the markets. But yesterday we also had the OPEC report that came in yesterday, and that is those reactions that you're looking at as well. So OPEC says that the supply is expected to exceed demand in third quarter of 2025. It already has done that, and for the next year as well, they're looking at a slight surplus in 2026 also to the tune of 20,000 barrels per day. But interestingly, while the number may be very strong, OPEC earlier has been talking about a supply issue, as in a lesser supply. But now they're talking about a surplus supply, and that change in narrative is what is weighing onto the markets there. OPEC also says that they have overall pumped nearly 43.02 million barrels for the day in the month of October, which is lower than what they've done in September, majorly because Kazakhstan pumped lower. But remember, OPEC has increased by nearly 2.9 million barrels per day in sense of production. Not all of that production has come into the market, is the reason OPEC also has increased a very small hike for December and have planned to do nothing for the first quarter of 2026 therein. The IEA report also came in yesterday, and they expect production at 106 million barrels per day next year, while the consumption is expected at 104.1. So that immediately gives you a 2 million barrels per day of a deficit, or rather a higher supply in the year 2026, also weighing onto the market. So production is more and consumption less. The markets also are looking at the U.S. output, which also is on the higher side. The oil output from U.S. is expected to hit a record of 13.59 million barrels per day. And they're also saying that the inventories have continued to increase in U.S. for the last couple of weeks itself. So whether it is about OPEC report, IEA expectations, non-OPEC and U.S., we are looking at production increasing everywhere and consumption clearly not keeping pace with that. Take a look at the data on IEA also put out in sense of supplies and demand expectation. Now, this is the supply glut expectation coming in from various agencies. Mercury has put it at 2 million barrels per day. 4 million of an excess supply is what OPEC, IEA and World Bank have put out. Goldman Sachs report came in last week. 1.6 is what they're putting out, and CIBC puts it at 1.5 to 2.5. So one thing is very clear, that we are looking at anywhere between 1.5 to 4 million barrels per day of an excess supply in crude in next year, and that perhaps could continue to weigh onto the prices. At these current levels, we perhaps see much of that already factored in. Now, this is a way forward for the crude oil prices. EIA, with their report yesterday, suggests that $55 of an average price is what you could be looking at in the next year. And then you have $50 a barrel is what CIBC puts out. 62 to 68, we have World Bank and Citi putting out as well. But it really is within 60s and 50s that most of these banks and brokerages believe that the crude oil prices could be trading within. We also have Bank of America talking about 64, and then at 60 from Morgan Stanley. Within 50s is Goldman Sachs and JP Morgan talking about 55 to 58 of an average for the next prices. So as I said, between 50s and 60s is where perhaps we could be looking at in crude oil prices for the next year.
Okay, all right. Thank you for that. So crude definitely in focus today. Manisha, thanks for all the details. We need to take a quick break. But on the other side, it's our special segment. It's the economy coming up. Lata today speaks with S&P economist Paul Growald and CRISIL economist DK Joshi on the CPI numbers, export package, and the growth stimulus from data center investments.